Welcome to the September 21st, 2018 edition of the BitcoinNews.com Daily Podcast. We cover the biggest stories in Bitcoin, blockchain, and cryptocurrency, as well as latest market trends and the mechanisms driving the market trends. This is your host, Space Marine, live from a portal to another dimension.
This is Space Cadet. Glad to be back with y'all. What is up, everybody? Bitcoin is hovering around 6750.
Affirmative, Space Cadet. Bitcoin has gone up. The rest of the crypto market has gone up, and we're about to talk about that. But Bitcoin was as low as $6,100 during a flash crash around September 19th, and that's gonna be our first, or that's coming up. But so Bitcoin was around the $6,100 level at its lowest, maybe $6,200. And now it's risen as high as $6,800 earlier today. So we're talking 10% price increase for Bitcoin in the past week. And Bitcoin's not even the best performing cryptocurrency, which is rare. Bitcoin's dominance percentage has declined to 51.4%. We kept talking about how Bitcoin's dominance percentage was rising. It was rising consistently for a long time, all the way up to maybe like 58%. Now it's down to 51.4% and dropping like a rock. This is because especially Ripple has gone crazy. Ripple rose from 27 cents to 77 cents in about 4 days, and that's a 185% price increase. It hit that peak of 77 cents really briefly earlier today, and it's leveled out now around 55 cents. It's actually at 56 cents right now, so it's still up way over 100%. So this is like a taste of what the crypto markets were like back during the rally 2017, and that continued into early 2018 for the alternative cryptos. But in late 2017, Bitcoin already started declining. But this is what it feels like. This is such a rapid rise. Over 100% profits for people that held Ripple. And Ripple didn't seem like that good of a candidate to hold because most of the Ripples held by the Ripple Foundation and Ripple Labs, like 40 billion Ripples in circulation. And then there's 60 billion Ripple being held by these centralized Ripple organizations. And this goes right into our first story. I'm going to come back to the market analysis, but I just want to go right into this Ripple story.
Ripple rallies 110% in 4 days as positive factors converge. Space Marine.
Affirmative, Space Cadet. So when I wrote this article, it was like Ripple rallies 70%, and then my editor updated to 110%, and then it went as high as 185% just to show how fast this is evolving. And so I actually did some research of why is this happening right now, because like no one thought Ripple would be the one just to go crazy in the market first. Well, there's a few things going on. One is the commercial bank of Saudi Arabia has signed a partnership with Ripple, but then I looked at all the banks that already have partnerships with Ripple. There's like dozens of them. Big banks around the world that have partnerships with Ripple, so I don't think that's the main reason for the rally. Another important thing is Apple has integrated some of Ripple's technology into Apple Pay. And that was a little while ago, and that didn't cause an immediate market spike. In fact, Ripple is still declining when that happened, and I don't see the exact way that integrating some Ripple software, not necessarily the Ripple cryptocurrency itself, XRP. I don't think that would have direct impact on XRP spot markets. And just to be clear and clarify this, Ripple is a company and a type of software that can send payments across the world in a cryptographic way, but then XRP is the actual cryptocurrency. It's kind of like they have a company called Ripple, and then XRP is their native cryptocurrency, but you don't really need XRP to use most of Ripple's technology. But then this goes right into what's going on, the real reason. So up till now, Ripple had X-Current, and all these banks, dozens of them, signed up with Ripple. They used X-Current, and that doesn't require using XRP. They can send with any sort of token they create. It's kind of how you create Ethereum tokens. You can create Ripple tokens that represent like USD or euros and stuff like that, and send them across the Ripple network. You didn't have to actually use XRP, but now they're creating XRapid, where you have to use XRP. So all these big banks already signed up with Ripple are going to have to all at once use XRP, where they didn't have to do it before. So maybe some of these big banks, maybe they put a little money in. You know, these are a lot of big banks, and they might have put like $1 billion in to spark the rally, and then now everyone's realizing, hey, XRapid's coming, maybe that's the reason it started going up, and then people are like, wow, this is a legit reason, and all these banks are going to have to buy a bunch of XRP, because it's a better way. I think XRapid probably has improvements over X-Current, so they're probably going to choose to use XRapid. So it's like a great game plan from Ripple to get all these banks that they're already signed up with to suddenly start using XRP all at once. It's a really good scheme, and I didn't see that coming. And then I looked at the past market data. XRP, when it rallies like this, like if you look at the charts, it usually keeps going up until it's above $1. And just to put that in perspective, it was like 27 cents before this rally, and then it's rallying like it's going to go above $1. And the past two times this happened was in May 2017, and then also in January 2018 when the whole altcoin market hit its peak. Two important things here. So it went like above $3 both time this happened. Additionally, whenever Ripple rallies like this, it usually coincides with a large cryptocurrency rally. And that's exactly what we're seeing, and now I guess we could jump right into the rest of the market analysis. I don't want to stop with that. So whenever Ripple rises like this so quickly, usually the rest of the market rises. And maybe Ripple will rise some more, like I'm saying, to above $1. But then again, it's went up to 77 cents, and now it's back down to like 56, 57 cents. Maybe the rally already broke, and that's always possible because Ripple holds a ton of coins for themselves, and they could dump it right now because they're probably like, okay, it went up too much, let's just make some money. They're legally allowed to do that. I don't want to speculate and accuse them of anything, but they could do that. They're allowed to. It's in their wallet. They could just dump it. And who better to dump Ripple than Ripple itself? So, looking at the other coins, Ethereum is doing amazing today. There was actually one of the news sites carried a story that Ripple passed Ethereum's market cap, and it happened for a brief moment. I was sitting on the toilet, and I saw Ripple pass Ethereum, and I was like, wow, that's a great topic. And then by the time I got off the toilet, it was actually back down below Ethereum. So now Ethereum's sitting at 25 billion, Ripple's at 22.5 billion. So Ripple briefly went above Ethereum, and I think that was just totally bubbling activity, because that's when it hit like that 77 cents and then started coming off of it. That was like a bubble, speculation, craziness. But Ethereum simultaneously, now it's up 13% today. It's at $245. I remember Ethereum was as low as like maybe 170 recently. So Ethereum's up a ton. Ethereum's been seeing really good profits, and everything looked really dark for Ethereum because BitMEX was like threatening to short sell dump it with 100x leverage. And also all the DApps, decentralized apps, are losing a bunch of usage. So Ethereum is looking dark, but now it's like really rising up quick. And so it seems like Ethereum probably will hold on to the number 2 spot because Ripple might be done with the rally. I know I just said it usually goes above $1. It almost hit $1, I guess. But it already is backing off. And I think once a coin drops off, like from 77 cents to 57 cents, like that could cause a big crash, or at least like the end of the rally for now. But the rest of the crypto markets have just begun their rally. EOS, I don't like EOS that much. It's kind of centralized. It's China's favorite cryptocurrency. I just saw an article how China ranked EOS as their number 1 again while they dropped Bitcoin's rank. And then, so EOS is up 10%. And then Stellar is up 8%. Stellar's kind of like Ripple, except it's like less centralized and also cheaper. Litecoin is up 9%. So the story today is like Bitcoin went up too. Bitcoin went up like 3.5%, but like everything else did a lot better. Like if Bitcoin went up the amount that the altcoins went up, it would be a really crazy good day. Regardless, the crypto market cap's up to 225 billion. I think like the other day it was 200 billion. So the crypto market cap is increased by like over 10% in a day. That's always a good sign. Now some other coins. Cardano's up by 12%. That's like a scientific version of Ethereum supposedly. Monero is up 8%. Tron, which is like a file sharing platform that no one really uses yet, that bought BitTorrent, they're up 16%. IOTA, the number 1 directed acyclic graph cryptocurrency, is up 8%. I could go on and on, but so basically altcoins are really doing good today, and it seems like maybe this will start a big altcoin rally overall, because this is actually a decent time to throw money into the altcoin markets for investors, because this rally could continue for a while. Even if Ripple doesn't keep rising, this seemed to have sparked a rally. It got people interested. It probably made the headlines on the international news, even for normal finance sites. Now we're going to move into another story involving markets from a couple of days ago on September 19th.
Futures. Expiration causes extreme Bitcoin volatility. Space Marine, take us through this story.
Affirmative, Space Cadet. So on September 19th, there was an event on the Bitcoin markets where Bitcoin dropped from $6,330 to $6,100 in an hour, and then it rapidly rose to $6,550 a half hour later, and then it dropped again in the next half hour to $6,400. So that was like some really extreme volatility, even more extreme than Bitcoin usually is. And I looked into why did this happen, and it actually coincided with the monthly expiration of Bitcoin's futures contracts on the Chicago Board Options Exchange, one of 2 futures exchanges in Chicago, and the only 2 futures exchanges for Bitcoin in the United States. And basically there was a past article that I wrote on Bitcoin News that found Well, Thomas Lee, the head of research at Fundstrat Global Advisors, I wrote an article about what he found. He proposed that the expiration of monthly futures contracts leads to market volatility, and he particularly finds that it leads to Bitcoin's price going down by, on average, 18% based on 6 months of data. And basically what happens is the futures traders hold actual Bitcoins, but they also hold these contracts, and they actually can short the futures contracts. So they actually try to manipulate the market a bit by dumping some Bitcoins. And this is a really good example of that. Like right before the contract expiration, someone dumped a bunch of Bitcoins. So whoever was shorting futures in Chicago, they made extra money. Quick money. It's a good little scheme. So I think that's exactly what happened. So the expiration of futures contracts leads to an opportunity where people manipulate the market so they get their short sell futures positions more profits. And then it actually dropped Bitcoin's price below 30 on the relative strength index, RSI. And it's rare when Bitcoin drops below 30 on the RSI. And like people use the RSI to make trading decisions. So I think a bunch of people bought Bitcoin just because they saw it go below 30. They know that's like too low. So they bought Bitcoin a lot. So even though it went down quickly, and then it started going up quickly. And then I think once the futures contracts expired and it was time and their short sell profits were locked in, those people that sold their Bitcoins bought their Bitcoins back. So the people buying their Bitcoins back after they manipulated the market by selling them quickly, because they wanted to keep their Bitcoins, but they wanted to sell them real quick just to make quick short sell profits, but then they bought them back. Plus, other investors were buying Bitcoin because the RSI dropped so much that the combination caused Bitcoin to shoot up a lot more than it dropped. And then it shot up almost to overbought territory. Like it shot up to 68 for a minute. And when it hits 70, that means it's overbought. So as it hit 68, people that used the RSI, the same people that used the RSI to buy Bitcoin when it dropped below 30 would say, okay, now it's time to sell. And they made a quick profit if they did that, if they were like on top of it. So that's what happened. Bitcoin futures contracts expirations plus RSI led to a really flash crash and flash rally. Now for our next story.
Bitfury Clark most efficient 14 nm Bitcoin mining chip, Space Marine.
Affirmative, Space Cadet. So Bitfury is a rival company to Bitmain. They're not as big, but they produced a 14 nanometer Bitcoin mining chip, and that's not very particularly interesting, but they actually made it really, really efficient. So it's called the Bitfury Clark, and they optimized their silicon packaging on the chips, and they optimized the power distribution and the cooling design, and they were able to squeeze power consumption of 0.055 watts per gigahash per second, which is really impressive. Because 111 in Japan has 7 nanometer chips, and how it works with chips is 14 nanometers means the transistors are bigger, less advanced, and 7 nanometers means the transistors are smaller so you can pack more onto the chip, and usually it's more energy efficient too. So the 7 nanometer chips from 111 have an energy efficiency of 0.05 watts per gigahash per second, and yet the Bitfury Clark has an efficiency of 0.055 watts per gigahash per second. So the Bitfury Clark actually branded itself and marketed when they released it like a day ago. They said they were the most efficient chip ever. That was not true, but also they weren't very far from a 7 nanometer chip, even though they're using a 14 nanometer chip. So that indicated to me that 7 nanometer chips could be optimized a lot more with the sort of technology Bitfury used. So there's a lot of room for improvement. So that's like a really positive thing, because there needs to be a lot of room for improvement for Bitcoin mining to stay profitable. Like that Bitcoin hash rate's going up by like over 100% every single year, even during this bear market. So Bitcoin's price has been going down, the mining difficulty has been going up, yet the hash rate is still like exponentially rising. So they need like extremely powerful and new technology all the time just to keep up. And the Bitfury Clark kind of helps with that. But then Bitfury didn't get to like bask in the sunlight for too long on this one. Now we're going to go into our next story.
Bitmain to launch 7 nanometers anti-miners, possibly the most efficient mining rigs produced so far.
Affirmative, Space Cadet. So Bitfury released their Bitfury Clark, and then literally less than a day later, Bitmain released a 7 nanometer chip that outdid the Bitfury Clark. Bitmain has an energy efficiency for the 7 nanometer chips of 0.042 watts per gigahash per second. So they beat out 111, which is one of the first companies that started releasing these 7 nanometer chips. And also Bitmain has the infrastructure and the money to actually launch this worldwide all at once. So this is going to bring 7 nanometer chips into the mainstream, so it's a huge story. So now, right now, Bitmain was using 16 nanometer chips with an efficiency of 0.1 watts per gigahash per second up until now. And now those 16 nanometer Antminers use 138% more electricity than the new 7 nanometer Antminers that are coming. So they not only produce the chip, they're producing Antmining rigs. Antminer is just like the main brand for Bitcoin miners from Bitmain. And they're going to be, and they have much, much less energy usage than the old ones. So everyone that has the Antminers right now, they're all going to go obsolete within like a few months probably, or less. Probably like now. So they're all going to go obsolete, and everyone's going to need to use 7 nanometer mining rigs. And that's a great shift, actually, because I've been watching this closely, this evolution of 7 nanometers chips. And that's actually getting towards quantum. I'm not going to go into that on the show, but you can only make transistors so small before they don't work anymore due to the laws of physics. 7 nanometers is pretty small, and they actually were just released to the public this year in any way. And cryptocurrency is like one of the first fields to use 7 nanometer chips at all. So now Bitmain's going to bring it into the mainstream, and everyone's going to have much more advanced mining rigs. Bitcoin's hash rate's probably going to go up by over 100% due to this development. It was already exponentially increasing, but it takes hardware developments, advances like this to make it keep going up. So we're pretty much guaranteed to see over 100% increase in the next year on Bitcoin's hash rate, probably more than that. Because basically what's going to happen is like everyone's going to get these 7 nanometer chips in large amounts, driving the hash rate up and up and up until they're no longer profitable. That's just how it works. It's always like that. And then someone's got to release like a 5 nanometer chip to keep up or optimize it. Like we just said in the past one, yeah, Bitmain optimized it a bit more because the Bitfury Clark is at 0.055 watts per gigahash per second for a 14 nanometers. Yet Triple One is at 0.05 watts per gigahash per second. And then Bitmain's at 0.042. But if Bitmain did everything Bitfury did for the 14 nanometer, Bitfury could make the 7 nanometer like probably use 50% less electricity or more. Because 7 nanometer has a lot of potential. So there's probably going to be the next wave before we see a smaller transistor size on the chips. We're probably going to see just like more efficiency using other methods of improving the chips besides reducing transistor size. And then I ran through some calculations on this. At the current Bitcoin mining difficulty is 7 trillion. By the way, it was like 1 trillion at the beginning of the year. Less than a year ago, it was at 1 trillion, not 7 trillion. The Bitcoin mining difficulty measures like how difficult it is to mine Bitcoin. So it's like hundreds and hundreds of percent harder than it was at the beginning of the year, even though the prices were going down all year. So anyways, at this current difficulty, Bitmain 7 nanometer chips would still be profitable even at a Bitcoin price of $2,900, and that's a big shift. Right now, the Bitmain Antminers, a lot of them have become unprofitable even at the current price around $6,000, $7,000. So now they're going to be profitable all the way down to $3,000. And there's actually a really solid support level of $5,800 we keep talking about, and it's probably not going to go below that. So then I did another calculation. Let's say Bitcoin sits at its support level. It probably won't. It's probably going to go up. But let's say it sits at $5,800. The mining difficulty could be as high as 15 trillion. And that would correspond to an increase in hash rate of over 100%. So imagine if Bitcoin's price goes up. We're going to easily see a hash rate increase of like 200% or 300% or more from these new 7 nanometer chips. This is how it is. Whatever the best technology is determines the hash rate, pretty much eventually. Because all the people with money in the mining game, they're going to buy these 7 nanometer chips ASAP. So that's all we have for you today on the September 21st, 2018 edition of the BitcoinNews.com Daily Podcast. Go to BitcoinNews.com for the full spectrum of Bitcoin, blockchain, and cryptocurrency stories 24/7. This is your host, Space Marine, signing out, going to another dimension.
This is Space Cadet. I think I'm joining you.
Don't get lost this time.
Thanks for listening.
Adios, amigos.